The bank has registered a profit before tax of 24.78 billion, up from 22.4, a growth rate of 11%, profit before tax, and a profit after tax of 10%, up from 15.8 billion to 17.5 billion. So when you look at the total income, we are back to pre-interest capping rates. It's no longer when we were growing at 1%. As we can see, we have been able to completely adjust ourselves, and we could see a growth of 11%. When you look at the diversification, we now see that non-funded income has managed to hit 41% contribution of the total income, and that compares to our peers at 37. So we are 400 basis points well positioned from that. And the objective of payments now is to move that 41 to 50. Where we'll get 900 basis points, we think it is in payments. So it's a transfer of value, and will be very, very big in that space. We still are seeing positive growth in the subsidiaries. We can see the subsidiaries growing their assets at 26%, when Kenya is growing at 21%. So still outpacing Kenya, and now contributing 27% of the total assets. So we're not far from our target. We just need to increase that by 13 basis points, and we reach 40%. And we can see that happening maybe in course of next year. And essentially, we have achieved a very diversified sovereign risk, such that the concentration ceases to be. It's very satisfying to see Uganda, Rwanda, and DRC are now able to have a return on equity higher than their cost of capital. So essentially, anybody who had been concerned about capital allocation now sees that the regional expansion strategy, the regional diversification, the management of the sovereign risk concentration has paid off. And these subsidiaries can only go one way, like they have been going, up and up. The customers were served in the branches if they wanted to buy foreign currency. Now they are buying it online. You buy credit to your account, and you go and withdraw from the ATMs, or you pay directly from your internet, or because you have the foreign currency on the devices. And we can see that's the fastest growing delivery channel. If you look at EasyBiz, which is corporate internet banking, so far this year, it has handled almost 320 billion shillings in volume. And as you can see, it now has outpaced mobile. So internet banking has taken and is challenging the mobile capability. So digitization now has gone beyond mobile banking to internet banking. And now the whole customer segment is digitized, and we are now in a virtual space. The barrier in merchant banking has been the cost of a POS. We've now gone to the mobile POS. Your phone is converted into a POS, and we can see the number of transactions, again, has grown by 91% and 149% in the volume that is being transacted. Winning for us will look like when retail commerce stops using cash, and we buy sukuma wiki, we buy bread, and we buy milk at the kiosk digitally, electronically. And this is what it means, how quickly we are being embraced. We now have 46,000 of these easy pay merchants. And these merchants can do much more than payments. They can also do transfers and exchange of value.